Can I ask you a little bit about the task ahead for you? Because this is a business that's been through many challenges and big changes at the top in recent months. How do you go about rebuilding trust with shareholders? What's the most important task for you?
Well, the most important task, I think, for shareholders is, besides the dialogue that we really stepped up massively to explain what our plans are, what our future steps are. Of course, the other step is to deliver. And in that sense, the third quarter is kind of a mixed message. One, very encouraged by the volume momentum and, in fact, the positive turn on prices that we see in our markets. At the same time, the third quarter, as you have seen from a variety of industry announcements, in fact, everybody else is in the same boat, a number of very natural disasters, hurricanes, earthquakes, all sorts of items happening that have made it a bit more muddled in the third quarter to prove that. But I think that's the best way to get our shareholders back on board, is to show our plans, get granular on how we're going to get to the 2020 targets, and then showing the steps to get in that direction.
As far as execution, Thierry, hiving off your chemicals unit is something shareholders are watching very closely. And in the last Bloomberg interview, you said you had a significant amount of interest from corporate bidders. How soon do you expect to be able to give investors results on this?
Well, as you've seen, that we've also announced today that we go for an EGM, a shareholder meeting at the end of November. That is to ask the formal approval, and we will do it for a dual track that is both a sale or a legal demerger of the company. We are completely on track, which was always a very complicated process to get a big chunk of the company basically independent. And we've seen already in the pre-phase, indeed, as you mentioned, lots of interest from both strategic players, from private equity companies, etc. So in that sense, I believe as we get into the process, as soon as we have the approval from our shareholders, that we will be able to execute the process. And I think it's going to be quite some buzz around what would be the right ownership, be it through a sale or be it by a public listing.
Can you, I mean, if you go for a sale, do you know if you'd prefer to go to an industry player or to a private equity owner? Do your labor unions have a preference? What would push you in one direction or the other?
I don't think we have a special preference on in which direction it would go. I think what we will look at, of course, is a combination of what is the value that's being offered, both the monetary value, but also assurances on what the new owner is planning to do with the business. So it's not really to the identity of the buyer. It's really around what is the best overall package for what is an excellent asset to make sure that that future also continues for all the stakeholders.
Thierry, you've expressed some confidence in the past that PPG will not come back with another bid for the business. Why are you so confident about that? Are you speaking to PPG?
I've indicated that because it's really not part of our management team meetings. It is something that we don't take in our plans. Any company that is publicly traded, if there is an offer, you have to assess the offer on its merit. So my point was more that there is really, it's not part of our agendas. It's not part of my management team meetings. We have our hands full to basically make sure we deliver on our 2020 plans, and that was what I was indicating when I made those statements.
Although if you cut, I mean, today, you said you're not going to meet your profit goals that had been previously announced. You previously have given a profit warning. If you continue down this path, doesn't at some point a $29 billion bid look like maybe a better option for shareholders?
You just have to put it in the industry context, however. The whole industry has changed. So the exuberance that the whole industry had after the first quarter, including Akzo Nobel, of course, then you start seeing specifically for a euro-based company, you saw exchange rates going down, you saw raw material prices going up. There's always a lag in our industry to get our prices in the market up. So that's why I'm very encouraged that we see that happening. We also see the volumes starting to grow in what is typically a pretty flat market for everybody. So in that sense, I think you have to look not only at what we are doing, you have to put it on the context of what is the health of the markets we're operating in right now. So very, very confident. We also, by the way, announced stepping up because I can't talk every time around external events, around what we control ourselves, and that's around our own cost management, it's around our pricing, and it's continuing to, the momentum of growth in the markets there to reach our 2020 targets.
Thierry, what conversations are you having with Elliot Management at the moment? What do they want to see from the business?
Well, as has been published on the standstill we have with Elliot, I'm happy to say that the conversations with Elliot are now in line with what you would expect with any major shareholder in the company. So I'm sure everybody is very curious about what are we discussing, but frankly, it's very much as we do with other shareholders, elaborating what we are. Yes, Elliot gives their input on what they suggest on doing that, but I think it gets into a neutral to positive dialogue, as you would expect with, as I said, with any other major shareholder. So there's no really specifics there.
How much of a turnaround do you see in prices, in exchange rates? I mean, you can't obviously predict natural disasters. How can you be so confident, very, very confident, with these things that are so difficult for you to control?
That is correct. Well, there's a couple of elements in that, indeed. We cannot foresee natural disasters, and maybe that's a good thing to some extent also. But if you then go to what we can control, what we've seen, and this is the first quarter after all the raw materials started to increase on us, what we've seen, if I look at our performance coatings business, you have to take a little bit of abstraction of marine and protection, which are businesses oil and gas related, and marine shipbuilding, which is really down. But when I look in all the other 5 elements of performance coatings, the volumes are up significantly, and our pricing is for the first quarter starting to go up. So we're starting not only to keep pace with our raw material increases, but starting to gain ground. Yes, I'm frustrated about how slowly that goes, but we're on the right track there. When I look at our paints business, our Dulux brand, the most major brand in the world, what you see also there is that it was very much impacted by pigment pricing. What we've seen in local pricing, that we have made the turn and that our prices are going back up. Now then you have to scrape away a whole layer of regional differences, price mix, regional exchange rates, etc. But in that sense, we are encouraged by seeing us making the turn if you take away all the extraordinary events. Then if I look at what is happening in the company around both on the chemical side, but also in the paints and coatings, to build one company, to get focused around how we can leverage our supply chain, our warehouses, our logistics, look how we can leverage and standardize our organization. I'm pretty confident we have lots of tools in our own hands, in addition to market trends, to bridge that gap and reach our 2020 goals.